Hey everybody, welcome back to Equity Guru. This is Chris Parry talking with a longtime friend of the site and generally recognized good guy CEO from Skyharbour Resources, SYH, the ticker symbol. This is Jordan Trimble. Jordan, bit of a month for you at a time when everyone else is throwing nooses over rafters in the C-suite. You managed to, in the midst of admittedly a spike in uranium prices, but I feel like that big spike has really coalesced around Skyharbour in ways that maybe the rest of the industry hasn't. How's it been on your side?
I appreciate that. No, it has been a good, it was a good September. When we last did the interview in August, I think I brought up the fact that, if you look at the relative performances of the uranium companies, you were seeing the larger and mid-cap companies move. Obviously, Cameco's had a momentous move higher over the last year. It hadn't yet trickled down to the juniors, and I think we've finally seen at least the early days of that, where some of the junior smaller cap names, not all, but most of them have perked up, which is good to see. It was overdue, and kind of the natural order of things in this industry, where you do see new money coming into a sector, especially institutional money. It's going to buy the larger cap names that are more liquid first. Those move higher, and then that flows down to the mid caps, and then to the smaller cap names, and then the micro cap names. And so, typically, yes, the smaller cap names can be they outperform later in the cycle. But yeah, no, we've had a good month. Still a lot of work ahead of us, and I still think very much we are in the very, very early innings of this uranium bull market. I think there's still a lot of runway here. Even with the commodity price trading up through $70 a pound, it's half of where it was in 06, 07, right? And there's a lot of bullish factors right now that are, I think, creating more pressure, upward pressure on the price. We saw the numbers come in from September on new contracting volumes. We're now north of 140 million pounds in the contract market, which is much higher than previous years, including last year, where it was the highest in over a decade at 120 million pounds. So we're actually fast approaching the replacement rate of 180 million pounds of contracted volume, and that typically is associated with price spikes in the uranium price. So look, I think it's still early days. Obviously happy with the last month and a half, but I think there's still a long way to go here.
Well, speaking of that last month and a half, I think the last time we spoke, your stock was at 32 cents. And there was a lot of talk about how that seemed like ridiculous. And sure enough, you doubled. You got up to as much as 64 cents over the ensuing weeks. I think you found a good mid-50s range for things to settle in. Obviously, when you go up that quickly, people are going to take profits. So there's going to be a little slide back. But I'm really impressed with how the stock has held over the last week or so. Even as everybody else is complaining about the markets, it's hard to raise money. You've got, 24 properties out there right now? There are companies that are based around just one, and the math still doesn't work out on your side. I still think your market cap for what you are in hold of is very low if you take away the big jump.
Yeah, no, absolutely. I mean, needless to say, it was undervalued in the 30s, and we've talked about this in the past, but you'll see me picking away at it, at those prices. I've said before, and I'll reiterate this, it's incredible value at those prices. And obviously the market's now moved higher, which is great to see. But yeah, I think from just, looking at the valuations of Skyharbour and our peer group companies, I think it's also important to, look at it in the context of the market and where we're at. And, as I just highlighted, I think we're still in the early days of the uranium bull market. I mean, we've done a good job building up the project portfolio to where it is today at 24 projects, one of the largest by acreage mineral tenure holders in northern Saskatchewan. We're really trying to build up the company to be this one-stop shop, if you will, for uranium exploration, high-grade discovery potential, and resource delineation in the Athabasca Basin across a diversified asset base, using both our money to advance our main projects as well as partners funding to advance the secondary and tertiary projects as a part of our prospect generator business. This kind of optionality that we offer investors. I think we've done a good job building that up. So no, look, I think there's, like I said, I still think there's a lot of runway here. And, we've seen in previous bull markets, this is really the first bull market that we've been in since we started the company 10 years ago. But we have seen, right before 2010, 2011, before we started Skyharbour, and then again in 06, 07, we see the kind of valuations and returns on some of these companies, even the junior companies. And I still think we have a long ways to go here in this uranium bull market. It's the thesis is playing out beautifully right now. And I also think it's important to highlight, yes, we've done a good job with building up the asset base, the team. We've done a great job assembling a top tier geological team with focused uranium exploration expertise in the basin, a management team and board of directors that's built and sold mining companies, that has a wealth of capital markets experience. But taking a step back from the company specifics too, I think it's important to highlight the importance of being in a safe, reliable mining district. And that's been topical in most commodities, but in particular in uranium, as we've talked about. But the market bifurcation, east versus west, the supply demand imbalance, particular in the West, as the Western Europe, Canada, the US, Japan, South Korea, these are the largest consumers collectively of uranium, of nuclear fuel globally. Yet between Canada, the US, and Australia, we produce, about a third of global primary mine supply. And so there's an urgency, and this was talked about extensively at the WNA, but there's an urgency to bring new primary mine supply and production online, in particular in the West. And again, it illustrates the importance and the significance of a region like the Athabasca Basin in a top 5 mining district in northern Saskatchewan, playing an integral role in this new production coming online in the West that Western utilities can rely on for future supply of nuclear fuel.
We talked about this briefly offline before the interview, but this really reminds me a lot of 2016, back in the day when someone you're intimately aware of, Brian Pace-Braga, had been quietly establishing Lithium X as a nice little lithium play when nobody was looking at lithium plays too hard. It built the company to a point where it didn't necessarily need to move the market, but when the market was ready to move, he was ideally positioned to take Lithium X to a higher place. It feels to me like you're in that same place where you've done the work, you've established yourself, you've shown everybody you're real, you've acquired the projects, and all you needed was for uranium to do what uranium has been begging to do for 5 years. Now, it seems like you're the mid-level company most likely to accelerate to the next level, to me.
Yeah, well, I've known Brian. I've been a friend of Brian's for years. I've known him since we were younger. So I appreciate that comparison. I mean, look, Brian did a spectacular job with Lithium X and coming in with a new company, new idea, and timed it almost perfectly. Exited with the sale a few years later. I mean, it was textbook really, as far as how you start and build these companies. So, but yeah, I mean, look, I think for Skyharbour, obviously we've been at it a little bit longer than that, and it would have been nice to have timed it maybe a little more appropriately, if you will. But it also was the opportunity to go out and in the call it 2010s, 2013, 2014, 2015, when the market was challenging, not just for uranium, but for all commodities. That was the opportunity for us to go and get these deals done, to acquire the initial suite of projects, not having to, pay a lot for them, right? We were able to acquire them at very attractive valuations. And, again, we knew that this day was coming. Like I said, it's always tough to call, to be bang on with your timing, but we knew that, it was grossly undervalued, and that there would be, you know, a day where we would see rising uranium prices, and we're now seeing that. And, you know, one exciting thing too with uranium, I think that's worth highlighting now that we've seen this trend reverse. And, you know, like I said, I think we're still relatively early. You know, as we've seen in previous bull markets, uranium and the price of uranium it's relatively inelastic, right? You don't have demand destruction when you have rising prices as much as you do in other commodities, because one of the main reasons being that utilities and nuclear power plant operators, the cost of the plant, of running the plant, the fuel cost is relatively negligible, right? So, you know, the mandate isn't, you know, necessarily to be the shark and get the best price possible on the fuel or on the uranium. It's just make sure you've got enough of it, and make sure you're buying it around the same prices that your peers are buying it, right? So it's more, you know, about, okay, look, if everyone's buying it at 70, 80, $90 a pound versus 40 or 50 or 100, wherever that number is, you know, don't step out of line, really, right? And so, yeah, look, you know, we could see a situation, this is what happened in 06, 07, and, you know, in previous bull markets where, you know, you can see the price of this commodity really take off. And you know, we'll see what happens in the next 6 to 12 months. But, you know, needless to say, it's been, you know, an exciting few months in particular. And I think, you know, again, the equities, there's, you know, as we talked about a little bit before this, you know, there still aren't that many uranium companies, right? I mean, yes, there's more that have come into the basin in other jurisdictions. And, you know, it's actually been a benefit to us as a part of our prospect generator business, having new partners and new interest in some of these other projects. But, you know, if you look at the universe of companies, there aren't that many, right? And so, you know, we can, you know, we benefit from that, is, you know, the little bit of money or the money that does come in. And I will say, like, one of the things that I noticed at the WNA, I've been going since 2017, 2018, and you know, needless to say, the temperature at the conference, especially with the mining companies, is a lot different, you know, this year than it was, you know, 5 or 6 years ago. That goes without saying. But there was also, it was interesting because there was also a notable uptick in investors that were there. Now, the WNA, the World Nuclear Symposium, the conference in London, is not an investor-centric conference. It's not a, you know, PDAC or, you know, some of these other more investor-focused conferences that we typically go to, or that investors typically go to. It's, you know, it's an industry conference, so you get the full spectrum of, you know, nuclear fuel service providers, mining companies, plant operators, government agencies, regulators, you name it. But yeah, there was an increase in the number of attendees from last year, which was good. But, you know, there was also more institutional investors and generalist institutional investors that we spoke with out there that were present, that, you know, had really never, in some cases, owned any uranium stocks or nuclear companies, had no exposure historically to the sector, but have done their due diligence, you know, 6-12 months of really digging deep and getting to know the industry and see the trade, see the opportunity. And what's interesting about that too is a lot of them, it seems like, have maybe taken positions in a Cameco or some of the larger developers, the Sprott Physical Trust, the more liquid vehicles and instruments they can invest in. But they haven't been able to necessarily deploy capital into the mid and smaller cap names. And so, you know, there's money still available to come in, money on the sidelines that, you know, could provide that next leg up, especially for the you know, the mid and smaller cap names, which is very exciting. So it was, yeah, you know, and just, you know, kind of a few other takeaways from the conference, because, you know, that was, you know, we kind of saw a rally coming out of that conference. You know, clearly the market, and this was talked about at the conference, has shifted from a fuel buyer's market, the utility, the companies, the fuel buyers, kind of having all the leverage and holding the hammer, if you will, and it shifted to more of a fuel sellers market, right? So the mining companies and the suppliers now in the driver's seat. And, you know, we talked about the contracting and that's ramping up, and we're seeing obviously the, you know, the spot price as well as the long-term contract price, moving higher, and the market's tightened up, extremely tightened up in the last year or so here. I mean, we knew that the intermediate parts of the nuclear fuel cycle, conversion and enrichment, had tightened up quite a bit in the last several years, but now we're seeing that finally flow into the into the U3O8 market, and so hence you're seeing the uranium price move higher. And so yeah, it's a very exciting time, and I think we're gonna I think we're gonna continue to see these upward pressures on the price continue to materialize into higher uranium prices. And there's a big supply deficit, as we've talked about, growing demand, some new nuclear technologies, the SMRs and others. One of the interesting talks at the conference was just some call it new applications for some of these new advanced nuclear techs, including SMRs. So Microsoft, for example, is planning to power their data centers with SMRs and with
right.
nuclear. And there's talks also, there's been talks more recently, and companies that are looking to utilize SMRs in maritime trade. I mean, if you look at these big tankers that are moving around the globe on a daily basis, they require a ton of fuel. And if there's a way for them to be fueled by nuclear propulsion, that's a lot of potential new demand. And it's not something totally out to lunch or crazy.
No.
We've been,
U.S. military is already doing it, right?
They're already doing it, yeah. So I mean, there's obviously some hurdles to that, but again, the fact that we're hearing about this and it's being it's being pushed forward. These are major new sources of potential demand for nuclear fuel and uranium in future decades.
I'll ask you a question that I've heard Frank Juster ask before, and I always think it's a really interesting question, because we kind of get stuck into the mindset of this is what we have to work with, so we're going to do the best we can. If you had the ability, if someone dropped $50 million on your lap and said, put it to good use, what would be the thing that you would do that would be like next level for Skyharbour, that would get it to a place that was superior to where you are right now?
Oh, that's a great question. I'd say it'd be a mix of exploration, drilling, primarily, needless to say. Like we would go at our two main projects, Russell Lake and Moore Lake, and there's no lack of targets, and we're obviously thrilled with what we've been finding at both projects. And I mean, we would spend a good chunk of that continuing to explore and advance those projects. Making new discoveries and delineating additional resources. So a good chunk of that would likely go into that. We'd probably look to explore some of the other projects in the portfolio. South Dufferin, we just acquired 100% of. Some of the other 100% owned projects that we have, and for sure we would look to go out and continue to expand the portfolio. What that looks like, what projects we would use our expertise and our network to go and try to get good accretive deals done. But it would be a mix of advancing the existing projects, and we could spend lots of money at them and deliver, I think, some incredible returns, but also looking to continue to add to the portfolio through accretive acquisitions.
So I always find it interesting when I ask that question. There are guys that are like, oh, well, we'd change the business model entirely. We'd pivot into this thing that we can't afford. And then there are other guys that are like, I'm really happy with what we're doing. We would just do a lot more of it.
Yeah.
That to me is a really good answer.
Absolutely. I mean, we would, I think we could grow the business exponentially, right, with that, and again, continue to ride this kind of rising tide we're seeing in the uranium space. I mean, look, we've waited long enough for it. All hands on deck, and we want to try to be in a position to take advantage of it the most we can going forward.
Generally speaking, when a junior miner doubles in price over a 6-week period, there's no end of guys tapping you on the shoulder saying, do you need us to raise some money for you? I'm sure you're taking those calls right now. What's the landscape look like?
Yeah, no, look, there's interest in financing and which is good. It's it's good to see there again relative to a lot of the other sectors out there, which is it's challenging. Obviously, I don't need to tell mining investors that that's good. And look, we're well funded right now. Like we've got a healthy treasury, as you and I have talked about. We, as a part of our prospect generator business, we got cash coming in, stock coming in from that. We're probably going to receive another $1 million to $1.5 million in cash and stock before year end from various partner companies. And over the course of the next 24 months, we could receive upwards of 10 million in cash and stock, assuming that all of the partner companies complete their respective earnings.
Sure.
Are we going to get all of that? It'll depend on the market, right? It'll depend on a number of things, but even if we get a portion of that, right? I mean, that's that funds, that covers G&A, that covers additional smaller acquisitions, that'll cover some of the exploration. And yeah, we're funded for the drilling that we've got planned at Russell as a winter program. So next year, so we're in good shape. And yeah, it's obviously we're always interested in obviously hearing if there's proposals, but for financings and but like we haven't had to raise a hard dollar in a financing since August 2020 with the money that's coming from the partner companies and some warrants. We've had some warrants that were expiring. In fact, I think when we last did the interview, it was the last batch of 22-cent warrants that were expiring and obviously exercised given they were in the money.
Yeah.
But that overhang of several batches of 22-cent warrants, which have all been in the money for the last several years, those have come in. So that's brought in some money as well, additional hard dollars. So we've done a good job keeping equity dilution in check. We've raised some flow through over the last several years to fund drilling, but we've picked our spots and we're very selective with where we spend our dollars. Now again, you have $50 million, as you pointed out, in a bull market. Your capital allocation and budget can change, and you can get much more aggressive. But we're still cognizant of the structure, and then yeah, we've got partner companies as well that are required per their earnings to spend money at the project, so that we don't have to, and we can benefit if they're successful, and we get quite a bit of news flow on top of what we're doing at our main projects.
And worst comes to worst, if they don't spend the money, you get the properties back. So
correct, yeah. So we just we get the projects back, and we've been with partner companies. We want it to be collaborative. We're not it's a win-win if they go find something, and so I like to think we're a good partner to work with, and we try to partner up with other good partners. But yeah, if they just can't make the option payments and the agreement they don't meet the requirements, then yeah, we would just we can take the project back. And the other great thing too is we take the project back presumably with some money spent in the field, so the claims aren't going to lapse. If we had just simply held them in our portfolio and ended up not doing any work on them, which is the case on some assets, and any company that's got big property package, that's always going to be the case. You're not going to go and be able to work every claim. Those claims eventually do lapse, right? So in this way too, it also helps manage and maintain a pretty large property package that you can hold on to without the risk of the claims lapsing.
Right. So you're really in a position where one, the resource market in general is crying out for money that you don't need. Two, you've got all this money coming in, so you don't even need to finance. Three, you've got years of austerity where you're living within your means. So just because the market turns bull doesn't suddenly mean that you're all flying private jets. This is we say a lot that something's a well-run company, but this is a well-run company. Like you've got to know that your reputation out there. I talk to a lot of microcaps, guys that are newly into the uranium space, and their aspiration is to talk to you guys, right? Your aspiration is one day some big guy will come and take off a bunch of our portfolio or take us out. But there's 100 little guys out there that are like wishing that they could be Skyharbour or partner with Skyharbour. That's got to feel pretty good.
Oh, yeah. Again, I appreciate that. My contact info is on the website, so I'm happy to chat with anyone. I mean, look, we are active in our prospect generator business. So, if there's, good partners that are looking for projects in the basin, yeah, I mean, needless to say, we'd be interested in chatting. And I think, yeah, look, I think there will be, given we continue to build up the inventory of projects, and there's, there is an appetite, investor appetite for this sector right now, and for this commodity. Again, that's the great thing with having a prospect generator business, is capitalizing on that. And so, yeah, no, I'm always available to chat if anyone wants to.
I always feel like the prospect generator business it's such an overall wrap of many different kinds of companies that it almost needs to be a separate descriptor for those that are actively working the prospects that they're generating, and those that are going out and throwing some tape around some moose pasture and saying, we too have 6 properties.
Yeah, I hear what you're saying. I think one of the things, I think we might have even talked about this through interviews, but this prospect generator business, I won't say that when we started the company that was what we had in mind. It was not, right? We're an exploration company. We want to emulate the success that other well-known discovery stories have had, like a NextGen, like a Fission, like a Hathor. And we offer that, right, through our main projects that we're actively advancing. And the prospect generator business really just kind of evolved over number of years, whereby, because we continue to add to the portfolio. And it's great to have a lot of property, but again, you got to manage it. And the prospect generator business is become a good way to do that. But yeah, no, it's an important part of the business. And it's great working with these other companies. And again, I love the idea of having multiple irons in the fire, having multiple shots on goal, where one company may pull that big hole and make a big discovery. And yeah, sure, we don't own 100% of the project, but we've got a minority interest in it in all likelihood, potentially an NSR, and we have a fairly sizable equity position in the partner. That's music to my ears, right? So it's a great secondary part to the business, and it's a great complement to that focused exploration we're carrying out at Russell and more.
The one other thing about the prospect generator business that I've heard from people who are in it is that it's like painting a portrait that's never finished.
Yeah. It's, I think that's a good way of putting it. And you're essentially giving, your shareholders and investors multiple lottery tickets, right? It's, there's this chance that, if any one of these pans out, as we know, it's, exploration and discovery is very high risk. It's very challenging and difficult to go in and make discoveries in any part of the world. And so, if you can spread it out across several projects and you can keep your equity dilution in check. We know the payout's big, right? We know that, the return is substantial. So, having, great if you have 100% of it, but, it's also pretty good if you've got, 20, 30, 40% in equity and royalty and you name it, right? So yeah, it's a great, business model. It may be, a lot of investors, I think, some investors, it's hard, it can be hard to value, right? The market doesn't necessarily give you, I think, the full value that's deserved. But I think in the long run, the value is eventually realized when, one, you're not having to dilute as much, and two, again, you have successes and maybe there's spincos or what have you. And so I think in the long run, it does get fully valued.
If a big company comes along and swallows you up and says, Jordan, we want you to run the prospect department and go find more things for us to buy, is that a happy place for you, or would you be off to your next adventure?
I'm very bullish on uranium, and as we've talked about, I mean, ultimately with Skyharbour, we want to have the company positioned down the road for an eventual to be in the crosshairs of a larger company, right? And we built a team around that, and I'm hopeful that down the road that will come. And I think look, right now I'm as bullish as I've ever been on uranium. And I having been at it now for almost a decade, I sure, I've been involved with other companies, and I'm not necessarily just a uranium bull, but I think it's the place to be right now. I think there's, like I said, I think there's a lot of meat left on the bone, and there's going to be, a couple. I think it's sustainable. Like, I think this bull market is a sustainable one, where we're not going to just see this kind of flash in the pan, screaming bull market for 6 months to 12 months. It's going to be, I think, the new price, the new norm for uranium is going to be a much higher price than even where it is today. And that's where it's just going to continue trading at.
And if the modular reactors catch on, well, that's a direct attack on lithium batteries going forward.
Yeah, and it's, I mean, I look at
wind and solar and everything else.
We'll see what the adoption rates like there, and how quickly they can roll them out. But yeah, look, that's and there's no real legitimate forecasts and analysis on this, right? Like, we know the numbers for supply demand with the current operable reactors and the build out and the reactors under construction, but that's not, most of those, almost all of those are not including any SMR projections.
Good time to be in the space. It was a better time to be in the space a month ago, but I think there's still a bit of climbing to go. I'll let you get back to it, man. This is, as always, a very intriguing conversation, and we'll talk again very soon.
I appreciate it, Chris. Always a pleasure.
And thanks for making us all that money that you made us over the last 6 weeks.
I'll keep at
it. Christmas lunch is going to have meat this year. Thanks,
all right, we'll see you later.
Jordan Trimble from Skyharbour Resources. SYH is the ticker symbol. Right now, it's trading at 56 cents. Last time we talked was at 32. Success story for anyone and everybody that's paying attention, and judging by the numbers that watched the last video, there's a lot of you paying attention. So let's talk soon.